Hello YouTube and welcome back to another video. Today we're going to be talking about the Amazon stock split and what exactly does that mean. It means that right now, meaning overnight, will be the last time Amazon trades at a share price of 2,500. Starting tomorrow, we're going to split the stock by 20 times, which means that as of right now, at the closing price of 25.10 on Amazon, the opening price tomorrow, if we open where we close today, should be 125.5. So the stock is now going to be closer to 100, which means it's going to be closer and more able to get traded by the average retail investor. Even though there are fractional shares, we've been noticing that the run up into a split has been quite notable. And we can note here that this has been a six-day string of gains for Amazon, and it's up by 25%. As one of the biggest companies in the world, we have to pay attention to this. It's very important because it looks like we are starting a W, and we can note that there is a gap zone right here. So I would say that if we're going to complete the first part of the W, we're almost there. We're looking for about another $100. And again, after 20 to 1 split, that's going to be about $5. If we're able to get above the $2,600 area, I'm seeing a larger pattern play out here. As we look at the weekly chart, we can note that if we are going to do a cup and handle or even more, Amazon could go even higher, right? It could be looking for a move similar to this. And all I'll note here is that, again, on the weekly chart, we can note that we got 25.41, and then that is going to be our 200 weekly moving average. That is going to be a resistance area. And then in addition to that, we also have the base right here at roughly 25.20, or that relative high. And then because we have all of this volume over here, which sold off into earnings, again, remembering that people generally like their money back. So when they get the first chance to, when we actually enter the range of this bar, and the range of this bar is, again, let's find out exactly what that is. The low here is 24.42, and the high is 26.22. So that's, right, that's about an 8-10% range. And if we're able to get over the gap, what that tells me is that we're probably going to keep going higher. So again, this 50 MA is going to start curling down, and there's going to be some resistance, but this momentum is building up. So let's see whether or not Amazon has any more juice in the tank. Finally, what I want to look at here is just, again, we mentioned it before, but Amazon's been on a hot streak lately. We note that in the last 1 week, all the trillion-dollar companies or the biggest weighting stocks inside the S&P are nicely green. Amazon leading the pack here with plus 12. We got Google up 9, Microsoft up 3, Apple up 5, Tesla up 9.5, and NVIDIA up 9.7. So what's notable about this is that, again, NVIDIA had, again, arguably bad earnings because they guided down. However, all these are up. And even Microsoft today had its own bad news. And how did that one close out? Not all that bad. Oh, God, it actually closed up green. Yes, sir. Gap down, pump up. And it even came in with volume. So off the low, that was a massive move on Microsoft. We can note that it is a 12.26% move. That is big. It is juicy, and we got to pay attention. As we look at the one-day heat map here, we note that, oh, it's looking a lot more green. These bulls are starting to flex. So with Amazon in mind, now let's have a broader look at the market and understand exactly how everything else shook out. Oh, it's a bull party. Everything's up. S&P and QQQ up. All the futures are up. Gold is up. Crypto's up. All the trillion-dollar companies are up. Every single ETF except for energy is up. So what's notable about XLE is just that we did hear from OPEC today that they're going to be increasing the supply by roughly 600,000 barrels per day, which should be bringing down the price of oil a little bit. And part of the reason why we're seeing the only area with red is energy. So there's breadth, there's depth, and this rally looks like it is starting to grow some legs. It's sprouting legs. We can note that by, again, looking through our checklist. And I forgot to do this, but I know we had our checklist from before regarding S&P, QQQ, BTC, and ETH. So again, here we got SPY, we got QQQ, we got BTC, and we got ETH. So as we look across the different risk assets here, we were looking for either, again, we were looking for SPY above 400, check. We're looking for QQQ above 300, check. We're looking for BTC above 30K, check. ETH above 2K, that one's still a no. So I would say this is close enough for our risk barometer that I'm seeing enough broad-based risk-on sentiment that if this is truly a real reversal, we got to start noticing that on the chart. So we're going to look at SPY in a moment. What I just want to look at next is going to be our fear and greed indicator, because believe it or not, we exited extreme fear. Talked about this yesterday, and now we're only in fear. So this is looking quite good. Why is it looking good? Because stocks generally bottom on bad news. And again, what did Microsoft have today? Bad news. What did Nvidia have during earnings? Arguably bad news. And since earnings, Nvidia's up by 24%, almost as much as Amazon. So, right, it kind of looks like good news is good news, bad news is good news. We had a lot of Fed speakers today. I don't want to get into all the details of that. We heard that, again, Brainerd pretty much told us that September is either live for 50 if needed, and if not, back down to 25. I don't see how we're going to stop raising rates, though. Anyways, let's shift gears here, and let's have a look at SPY. So, remembering from yesterday that, again, the Fed's talking, but the Fed's had some pretty hawkish comments. But look, the market went up. It's actually respecting this, roughly this neckline right here. So, again, shoulder, head, shoulder. That's a textbook bullish pattern. So, we got more hawkish news yesterday, even more today. We're hearing bad news from Microsoft, which led to a gap down, but it was largely due to foreign exchange because the dollar is just so damn strong. So as we look here at the dollar, it actually took a nice leg down today, and that's part of the reason why we're seeing relief on the stock market. So again, going back to here, this is also setting up what? The dub. Yes, sir, setting up that dub. And what I just want to remind you of is what we looked at yesterday before we look at the short-term pattern which is forming here, because it's actually quite bullish. So now we want to look over here to our hourly chart, and our hourly chart shows us that, oh my goodness, did we finally get some green volume? Wow, we got a green volume close with a breakout. Look at that, closing at the high of the day. Whoa. Today is the only non-OPEX day, so that is also notable. And we can note that we continue to rock our uptrend, right? We continue to go up. It continues to look good. So the reason why this is important is because as we start to remove the trend lines and just purely look at the moving averages, we note that we're actually due for a golden cross here on the hourly chart. Hourly chart feeds to the daily feeds to the weekly feeds to the monthly. So again, what was the challenge here? Well, we fell below the 50 MA, we came back up to test it once, fell back down, came back up to test it twice, came back down again, came up for a third time, finally building up enough pressure or forming a short-term W to blast off to where? Straight to the 200 DMA. Back tested once, back tested twice, back tested 3 times, and then push off. And then finally, if we get that golden cross, that is a lagging indicator, but it is a very positive and welcome sign. So again, now as we add all these trend lines back in, what does it tell us? Well, we were going down inside the blue channel. We tried to find support, and we started to go sideways from a short-term inverse head and shoulders, break the pink pennant, back test it, bust the channel, back test the VWAP, advance to the 200, and then keep advancing with what? Another W inside of here. The bulls want to win. Are they going to do it? Drop me a comment and tell me what you think. So again, now we're going to look here at the daily chart and just see whether or not we see some of that same classic setup happening. This is pretty close to a 50 DMA, but not quite there. We also note that we got a death cross, and the golden cross is going to take a lot longer to form. However, what do we have here? Well, we note that we have the start of a W, we have a cup and handle with a handle, and we haven't quite gone to the 50 DMA yet. So that is really going to be the resistance. And again, it's at 224.5 right now. It's basically 425. Nice big round number for us to use as a pivot. Volume does stink. Hard to deny it. This is a reluctant rally. People are not generally excited to buy. It's a reluctant rally. So with that said, again, I think that we can make it to the 50 DMA. And if we look here now at our weekly chart, what we can see is that, yes. Remember what we talked about yesterday? We do not know what this candle formation is going to be until it closes out. And because here we're looking at a weekly chart, yesterday it looked like it was bearish. Now it doesn't. Why? Well, because we got to wait all the way until Friday close, which is going to be tomorrow, to know how we're going to close out. So we mentioned this also that this is now going to form a hammer on the weekly, but also a hammer on the monthly. So if we don't look back from here, and again, let me delete everything again. If this pattern ends up being bullish, meaning it's an inverse head and shoulders, what could that mean? Well, hammer on the weekly with more pressure building up because we're where? At the high of the week, like we were last week. And then looking at the monthly, oh God, what is that? What is that? Those bulls, these bulls just want the chart to go up. So we're now back inside our pink box. We're now inside of that pocket of supply and demand. And this is looking quite good. Why? If we look back at this on July 1st or roughly a month from today, and again, whether we're here or higher, what is that? It's a back test with an advance. So if we can bust last month's high at 429.66, that's a bull break. Why? Again, we were going down. We had a capitulation volume day here, or a candle here, sorry. And now what? Inside bar, but with a bullish pattern. Oh, that is how a dead cat bounce turns into a reversal. And we've also started to take out some of these relative lows. So that's a very, very welcome and positive sign for the bulls. All right, so now let's look at a few more things and just try to understand what is happening here. So I want to look at a couple of charts. And I just want to actually look at QQQ first because we noted that one there was still a little bit laggy, meaning on the weekly chart. There we go. Right, a lot closer now. Getting to 316 starts to get us looking a lot better. We got 318.2 and 317.4. So we pretty much have to get a little bit higher here. Let me actually adjust that line. Should be about 319. So if we can rally the same today, tomorrow, boom, we're at 320 this week. Let's do it. We've only, that's a monthly chart. Oopsies. 3174, 318. All right, 317. We just got to take out the first low. We got to confirm by taking out all the lows, but 317 starts it. So we just need roughly another 1% rally from here to claim that area. I do want to see volume come in. It's something that's been lacking here again. Also looking at the volume buzz, we can sort these by what actually has positive volume buzz. The only one which is trading at above average volume is ARC. It's up 7% too, right? Whoa. It's almost about to break its channel. Oh, it did. Look at that. ARC is almost going to go back up. So a lot of positive signs here. Is it enough? I don't know. I think it will be. As a reminder, we do go through and do a Friday closing live stream on our channel. So stay tuned for that. We stream for the final hour. I would love to see you there. All right, so since now we're going to be closing out the weekly chart tomorrow, what we want to look at here is going to be some weekly charts for ones that matter the most and see whether or not we're seeing positive signs or some warning signs. As a reminder, again, what we're looking for here is our falling wedge that's ultimately going to lead to, let's see if I can just pull it up really fast because I think people are going to appreciate that I pull up the template and show you why we're looking at this. Look at this, look at that, and then look at this. All right, here we go. So again, falling wedge. Again, we see that here by the red line, which is pointing down. At a certain point, we stop going down. We start going sideways. Then we start going up. So the key part here is going to be the where we are right here. We're looking at this part here, right here, where we break out, we backtest, and then advance. What I'm more so paying attention to is this area right here, because this ultimately leads to an inverse head and shoulders. So again, let me draw it a little bit better, right? There's the shoulder, there's the head, there's the shoulder. So this is the opposite of a head and shoulders, and it leads to a sustained move higher. So what are we missing here? Well, let's look at the chart. Again, I would argue that this right here is our right shoulder. So when we look here, again, there's the shoulder, there's the head, there's the possible of a shoulder. The only difference here is that the amount of time that we have here, so again, going from February 22 to our head, that is roughly, it's roughly 12 bars. How many have we put in so far? 2. So if we're going to repeat the left shoulder side on the right side, 12 bars out gets us to where? Oh man, that gets us to August 1st, the week after we have the FOMC decision after July. Wouldn't that make sense? I think it does. So until proven otherwise, as long as we keep putting in higher lows and higher highs, SPY looks bullish to me. Stop going down, starting to go up. Definitely more momentum, but it's looking positive. It's looking encouraging, and maybe it can hold. QQQ, again, we can note that we did get back above the support area. I do want to see QQQ share price actually get higher than SPY's, meaning we're at 417 for SPY. We're at 314 for QQQ. I want to see QQQ start getting above SPY. That means that tech is leading SPY, and that's what we want to see. Chips also had a really good day. MongoDB had a really crush earnings report after the bell, and I think it's leading to some risk on appetite. The stock had a monster day today, right? 18.5%. It's busting. Seeing a lot of other names like Datadog, like Snow having massive double-digit days too. So right, DDog up by 12.9. Snow is up by 9. Cloudflare up by 5. And then I think CrowdStrike had earnings after the bell here. So yeah, it's down in after hours. So probably some soft guidance or whatever. Yeah, down 3%, up 7, down 2. Anyways, moving forward to the rest of these weekly charts. The dollar finally coming down, right? Come on down. And we want to see DXY even lower. We want to see it crack 100. It's almost back to flat on the week, which is an encouraging sign for the bulls. And we do want to see it start coming down because right now it's currently in a demand pocket, but it fell out. We do have a W, which is generally bullish, as we reviewed before. And we got a golden cross. So we got to make sure we pay attention to the dollar. About a half to a third of today's gains can be attributed to the dollar. VIX is coming down, so that's also a positive sign because the volatility in the market is now starting to subside. We're still in a bullish pattern. There's still in a bullish pattern though, so we cannot ignore the cup and handle here. TNX also coming down a little bit, right? Not quite able to get back above 3, so that's positive. Every single ETF is green. Let's have a quick look at Bitcoin. So Bitcoin's actually looking okay. It did have a huge advance so far, and now it's been backing off, trying to regather up steam. Right, still in the demand pocket here, so have to see it stop going down and actually break back above about 33,000 to confirm the move. ETH is really stinky. I like ETH more than BTC, but the chart does not agree right now. It's saying wait. Apple, look at this, right? We got WWDC on Monday. That's the Worldwide Developer Conference. There's some stuff that got leaked in regards to some product updates, software updates. I don't know if Apple's going to have anything in the tank, but closing at the high of the week again gives me some confidence that if there is something good, it's going to be an oversized move up. Microsoft, stop going down. Look at that. Bullish. Where would its neckline be? Right here. Also had bad news, and the fact it's going up on bad news tells me that fear and greed, going back into fear, means that even though people understand the worst case scenario or that there is more bad news, they're buying it up anyway. The bulls appear like they're starting to claim control. Google looks even better, right? Nice gain in the last 5 days. Off the low, it's now up by, right, over 10%. It's up probably about 12%. At the high of the week again, looking good. Need more volume, though. Amazon, talked about it before, right? Massive week, 9%. It's the leader in the trillion-dollar companies. Let's go, Amazon. Tesla. Tesla looks a lot better today than it did yesterday. It's up 4.6 on the day, getting it back to green on the week. It's got a doji. Let's see it get a little bit of a hammer by reclaiming the high at 792. And it looks a lot better than before. Again, Tesla is very volatile, a little bit bipolar. Let's pay attention to it. And then Facebook, even with Sheryl Sandberg leaving, the COO, stock was down dramatically yesterday. And what do we have here? We got a hammer. Inside where? Inside the demand zone. Oh, so all of these companies are getting tested. Like who? Like Tesla, with Elon telling employees you have to be back in the office. Or NVIDIA with arguably bad earnings, right? What's it doing? It's busting. I bought a little bit of NVIDIA this morning at the open, by the way. Happy with that so far. I think I've actioned about 4 or 5 new stocks this week. Happy with all of them. They're all green. So NVIDIA had some bad news last week. Amazon had a terrible earnings report, right? Facebook had a terrible earnings report. And then Facebook yesterday told us that we're losing our number 2 person at the company. Right? Apple said we're having some supply chain issues. Don't even know if we can ship stuff out. Doesn't care. It's up. Microsoft saying we have to re-guide based on foreign exchange or the dollar being too strong. The market just seems to want up. That's what it's telling me. All these ETFs are also looking really good. I want to look at 2. I just want to look at ARK and IWM because the most important thing here that I noted before I started recording the video was just that, again, we bounced off support or the green line. However, my target was this pink line right here or the relative lows based on our psychology chart. Where are we right now? Oh man, we're right there. Yep, we're right there. We're at 188. So if we stall out here, that is a bad sign. Finally, looking at ARK for our psychology chart. Where can it get to? Well, it stopped going down, and there is now potential for it to keep going up. How much higher? About another 14%, which would be today times 2. So today we went up by 7. That would be a repeat of today, and then one more. I think we're going to find hard resistance here at about 52. If we break through that, I am going to start getting a lot more bullish, which means buying more names, adding more risk, and making more money. With that said, if you've enjoyed this video, I would really appreciate a thumbs up. And if you're looking for my deeper thoughts in terms of how we started the week, how we got to here, and where we're going to go forward, I encourage you to watch the video that'll queue up here in a moment. Otherwise, I thank you for watching, and I look forward to seeing you tomorrow for our public live stream for the final hour. Thank you for watching.